Good morning, good afternoon, good evening, wherever you are in the world. Welcome to episode 10 of the Investing Blueprint. PJ and I are live and direct in the Bermuda trading desk, and Andrew's over in the UK at our UK trading desk. We have a jam-packed show. Please like, subscribe, and share this video with as many friends as you can. We're going to be giving away some prizes. All you got to do is type hashtag SFX into the live chat window. We're very grateful for our prizes being provided by Orchid Nail Spa. All you gotta do, like I said, is type hashtag SFX in the live chat to be entered into that. We also have some breaking news for you. Our show has been picked up by channel 82, so you can see this show and all of our previous shows live on Bermuda's premier cable channel. We know that your time is very valuable, so we want to say thank you very much for your time. Please put away all distractions. Let's focus on the show. We got a great guest, none other than Mr. Gary Langley, coming out of the UK, who's got a lot of knowledge that he wants to share with you. Before we do start, the Gumbe Festivals today. I'm a big Gumbe fan, so I want to just shout out Places Gumbes, who are providing the beautiful Gumbe rhythms behind me right now. And let's get on with the show, everybody. Have a great day. Let's bring in Andrew and let's bring in PJ. How you guys doing? How you guys doing?
Hey, I forgot that's what he showed, man. Look at me dancing to the beat. You're really having fun with this, but
these intros are getting better. I'm lost for words. That don't happen often.
He keeps them a secret too, like you know.
I know. I want you guys to just get into this.
Yeah. So what's going on, everybody?
Everything's good. Everything's good.
All good. Been trading gold last week. Had a good week. Been trialing a new system as well. So I just want to. I'll share that with you guys quickly, if that's okay, before we get into everything.
Go for it. I haven't done the blueprint in a while, so it's nice to get back on. I see. There you
Absolutely.
go.
Yeah, guys. So this is just something new I picked up this week, and a bit of a blunder. In fairness, returned like 23%. So it's not bad in the forex market, but I'm gonna take the foot off the gas next week. Really slow it down. Better risk management. But no, it's been a good week. And obviously, my other trading's gone well. That's pretty average, a couple of percent a week. But this one's done really well, so it's been good. What about yourselves?
What papers were you focusing on?
Just gold, dollar.
Okay.
And M5 time frame. So lots of trades going on, but it's a bit of fun.
Nice. Yeah, I need to get back into forex. I've been focusing a lot recently on the S&P trades. So want to give a salute to Ryan in the group. Goes by Ryan Rabane. He's kind of been sharing this sort of 1 day or 0 days to expiry options play. So I can just quickly show the chart. So I was looking at SPX, and this is a weekly time frame. And on Monday and Tuesday, if we zoom into Monday and Tuesday, you can kind of see where we were up pretty big on Monday, and then we gapped higher on Tuesday, and then Wednesday was a little bit of a topping candle. So on Thursday, I was trying to go short. And right before the close, I got a few puts in the S&P right before the close. And then thankfully, we got a nice little gap lower. So that was up in the money. And we just continued down for the rest of Friday. So really good trade. I'm happy with the results and looking to do a lot more like this in the next few weeks and months.
Yeah.
Really happy about it. Sometimes it's like all the work, all the hard work, all the preparation, all the things that you've learned can kind of just be applied. And this was one of those situations where it kind of worked.
Yeah. And what I liked about a lot of those players is that, it sometimes we overcomplicate things. So, you might do a lot of background research, you know what I mean? And it's just showing you like as many ways to skin a cat, So man, I'm really appreciating this guys sharing, their strategies.
Yeah, the groups are really lively. And I think without the groups, I don't think I would have picked up on this strategy.
There's been some really, really good information lately, and the not so savvy traders, they're on fire. So there's some really, really good traders in that group.
Yeah,
So
I mean, I really think a lot of the traders in that group are definitely
coming in hot.
Yeah. But we do have a special guest today, and I'm really excited for the interview. I really am.
Yeah. So, guys. So, as you know, I've been doing like the traders, the prop firm, the 5%ers, and I picked up on this guy called Gary Langley on social media, and started to look into his YouTube channel, and and I can see in the comments already someone said he's the real deal. He really is. So, he's not like an Instagram trader. He's not flash. He is a real trader. He keeps he got his own little network, but he's very humble in his approach as well. And so I reached out to him saying, do you mind coming on the show? And I nearly fell over when he said yes. Because this is brilliant, excellent news. And so for me, wow, some of the knowledge he's going to say, he gives some good details about his strategy away, and it's just really, really nice to meet a professional trader as well. So this isn't a hobby for Gary. This is what he does.
Yeah.
Really, really excited.
Gary, so welcome to the show. We're just really happy to have you here. Reached out to you on Facebook and Telegram, and just really happy with the response. You've just been really positive, and I've been following yourself, been following your Forex adventures with the 5%ers, and just been an inspiration to me. I've seen you pass your challenges. I've actually seen you been leveling up. So I suppose my question to me is really, what's your favorite asset to trade and why?
Oh, right. I kind of have two that I gravitate to all the time, which is I love the DAX. Now, my personal wage is normally the DAX, and I'm really pleased that the 5%ers have introduced that into some of their instant funding, which happens to be one of the challenges that I'm on. So the DAX is my go-to, but the other one is cable, pound US. It moves every day. Obviously, I'm UK based, so it's around the pound anyway. So if I'm ever watching news events or anything, it's always in my mind. It's always free flowing. But the main thing is, I understand it. It kind of behaves itself. Although at the moment it's been a bit naughty because it's in sort of 33-year lows. But if you're a day trader, it doesn't matter because every day is an opportunity and the chart will tell you what it needs to know. And because I've been around cable so long, you can see the motion within it. And the DAX is pretty much the same. And then if I move away from them, I have sort of secondary products that I look at. I like the FTSE. Eurodollar I'll keep an eye on, and I occasionally trade oil, and I do like gold as well. So I have like a core basket of what I look at every day.
Yeah. So you're definitely on the right chart. So I've been trading gold a lot lately, and when I just passed the last 5%, it was actually gold dollar that got me through. Yeah. But speaking to Mandela, he loves gold. He loves oil. Some Mandela's properties are like a savvy investor out of us all. But so quickly going back to the 5%, so we're talking about a prop firm, and yes. For those who are watching the show, a prop firm is really it's funding. You're actually trading somebody else's capital for them, where if you're a good trader, successful, you can make a profit and actually have a profit share with that company. So is there any other projects you've been working on recently, with regards to Forex, or are you purely focused on the 5%er?
Well, no, it's in two halves actually. I trade my own funds. I have a sizable account for myself, and that's actually broken up as well, because I do maybe 20% of my time is swing trading, the rest of it is day trading. Now, between my wage and the prop, it's quite easy, because whatever I'm doing on my wage, I copy it over into the prop. So the two of them run in tandem. And then beside that, how do I put this? I don't put all my eggs in one basket. So I'll trade a car fund, and I'll trade a house fund and a pension fund as swing trading. So I trade 3 funds separately so that they are not affecting each other. Now they're swing, and it takes a few minutes at the end of every day because I know the criteria I'm looking for. And then the other side of it is I just concentrate on my wage, but I'm savvy enough to know that as soon as I've hit my markers, I stop. And when I stop, it means I'm not going back to market, and I genuinely do stop. And that's what keeps consistency high. When you're talking about projects is a job. And if you don't follow the task properly, you don't complete the job. So I'm constantly working on myself as a project, if that makes sort of sense. So I'm constantly planning my day like a business, and I'll start at the same time, I finish at the same time, and that's the project.
You did mention paying yourself a salary. So yes. How do you just out of curiosity, how do you pay yourself a salary? I know you'll receive some funds from the 5%ers from prop, and then you said you have a few buckets of your own personal funds. What's sort of a good way to approach taking a salary?
Well, prop for me is bonus, because it is secondary to what I'm doing to my wage. And to cut long story short, I never wanted to do prop. I did it to help some guys that are in a sort of little group that I run, and they wanted to try it. And I can't speak unless I'm speaking from experience. So I said I would do it with them. So I went along those lines. So that's my bonus, right? So if you're at a job and you're sort of on piecework and they give you a bonus for doing a good job, that's what prop is. Now, my daily wage, I work it out like this. I work in benchmarks. So my benchmark is £200 a day. Right? Now, my yearly salary to pay my sort of just household bills, I've got no debt. I don't have a mortgage or anything like that. So I don't have to push myself too hard. 30,000 a year, puts clothes on my back, feeds the household, pays the utility bills, that sort of thing. And if I want to work 3 days a week, because I don't like to trade Monday, I don't like to trade Friday. I do, but if I do, it's going to be very sporadic. So my working days is Tuesday, Wednesday, Thursday. 200 a day, 600 a week, across a year is about 30 grand. So that's by breaking everything down into a monetary figure, helps me take a wage. So anything I do over £200 is bonus. Now, some days I have phenomenal days. I have really good days. And I might do 600 quid in a day. So I'll take tomorrow off because I don't want to give it back. But then when I go back on the third day and do another £200, I've had another good bonus. And that's how I build a wage up. Because I still think of this as if I'm running my factory.
It's really good advice. And you just made me think now straight away, because you're right enough with prop firms. Just I know the 5% and they're very reputable and they're a very good company, but who knows what tomorrow holds? So it'd be quite foolish of you to put all your eggs in one basket and maybe rely on one prop firm as your income for the remainder. So to treat it as a bonus, Gary, that's a really, really good way to look at it. And I'm sure Mandela will talk about this off air. But I think that's excellent advice. But
I'll add something into that though, because one of the things that I've discovered with dealing with prop, as I said initially, I never wanted to do it because I always used to think, well, why would I pay somebody to trade when I could put that money in my own account and trade it up? Now, I built my account that way. I compounded it up, but it took me 3 years to build it up before it became a point that could be safe, like a big enough basket of money that can keep you in the game, but also pay you at the same time. Now, with prop, you could speed up that process because your return on investment, take for example, the current rate on 5% is for the middle fund. If you're watching the journey that I'm doing on YouTube, I was asked to do it again. So I like putting pressure on myself, guys. I started it the first of this month and I'm 22% up. All right, so I'm right into it at the moment and I'm taking that through the journey. I'm doing it just for the guys, but that cost me €385 to buy into it, and they give me a 10,000 fund with a 600 drawdown. So in my mind, I don't look at the 10,000, I look at the drawdown. So that bought me a £600 account. All right, so straight away, or $600, shall we say. I will trade that, pass it. They will quadruple the fund, which will naturally increase that drawdown. And I think it'll go to, I think it's 2,500 is the drawdown on the next level up off the top of my head. But even thereabouts, so that 385 as an investment will buy me 2.5 grand in a very quick period of time. And then I can use that 2.5 grand to upscale again a lot quicker because they'll double the account if I do 10% thereafter. So if I go back to my starting of building a pot, if I started it that way, I'd probably half the time and then just draw the profit out and put it in my own funds. And then I haven't got somebody looking over my shoulder, shall we say. It's my own money. And that's how I use prop.
So one concern, so when I talk prop firms and when I talk to Mandela and some other of our trading colleagues, they always say to us, do prop firms pay out? So yes. Here it is, Gary. Do they pay out?
Yes. I've put it, I'm one of the few that shows my statements, but I also show what they use what's called a deal payment system. It's a little bit like PayPal. And every month they pay me on time, and because we had these questions saying, do they pay? And I said, right, all right, I don't want to do this because why would I show my bank account? Because people have asked that as well, and I'm like, what planet are you living on? But I don't mind showing you the deal account because it doesn't show any financial information apart from money going in and money coming out, and they pay me.
That's brilliant. So, very quick, where are you from? From the north?
I am from the north. I come from Durham in the north of the UK.
Right, okay.
And I've lived and worked in nearly every city in the UK over my life, and I can honestly say there's no place like home.
Yeah, I've got a friend from you, but his accent's much stronger. He's from Sunderland.
Sunderland?
Yeah.
Don't you put me in the same boat as one of them boys.
Don't swear on it.
We are like borderline tribalism up in the north.
Yeah.
You know, you watch Game of Thrones, that was based on round here.
We have viewers of varying experience levels. So for someone who's just starting out, maybe they just opened an account and they have £2,000 or £5,000. What sort of advice would you give to that person who wants to be a successful trader like you, Gary?
Well, the first thing is don't look to make Rome in a day. It's going to take time. Now, one of the best things you can do is teach yourself to slow down properly. If you win and you win again, you think all of a sudden that you are invincible. You're the king of this hill. But you're not. The market is the king. And if you try and take it on, you might get a lucky punch. But when it hits you, you're going to know about it.
Yeah, it hits hard.
We know. I lost 18 grand in 3 days. Right? Wow. It was the biggest loss I've ever had. And it taught me the best lesson in the world. You can sort of be a bit of a stealth, a bit of a ninja getting in and out. But if you try and take it head on, you will lose.
Yeah,
and the only way I could combat that was less is more. So I trade less, but I gain more.
Yeah,
So that's the best thing that I would do. But the other side of it is earn the right to trade. And what I mean by that is a lot of them, if you've got 2,000 in your account, you can effectively open up a £3 or £4 position on certain products. It's too big for you. Start with the smallest position you can and earn the right to increase it. And that's what I would do. And then when you do that, you'll start becoming calmer in the markets.
Yeah.
The markets are very easy. The technicals are very easy. The hard part is you.
Agreed. Yeah, I agree with that. Yeah, so for myself, I always say yes. I think every video we do. So my losses, and there's been some expensive losses, that's by admission into being, I think, relatively successful. But, you know, my advice is I always say to Mandela, I've bought every course, I've bought every EA, I've bought every robot, I've listened to every fake trader on Instagram who's got a flash car, and guess what? None of it worked. So, so, you know, sometimes you have to learn the lessons the hard way.
What are some of the things you look at when you are starting to prepare for your day trades, and what are some of the indicators or some of the techniques that you find most helpful?
Oh, okay. Well, I day trade exactly the same on all assets. Right? I don't believe in system hopping, because if I took the marker off the chart and I also took the time frame off the chart, you probably couldn't tell me what chart that was. So to me, it's the peaks and the troughs. It's the key turning points. But there's key turning points that are strong, and there's key turning points that are just chitter-chatter noise. So when I see these core sellers, as you were on about before, going, right, you're on a 5-minute chart, you see this zone and that, I like to, that means nothing in the markets, not a bean, right? So I start out on the high time frames. I'm looking at dailies, that sort of thing. And that is where your information is coming from. And then I'll filter it down into an hourly chart. I pay very close attention to levels, but the levels are all high time frame. For me, once you go below 4 hours, they hold no weight whatsoever. And even a 4 hour is, when it comes to levels, can be relatively weak, you know, but it's also how you map it out. Now, I love Fibonacci.
You two need to talk.
Now you're talking my language. I love a daily Fibonacci. Yeah. Oh yeah.
Right? Fibonacci for me, if I couldn't have anything else, would be what I use, because it can roadmap a chart. Not only can it roadmap it, it can give you an entry, it can give you take profit points, and it can also give you an exit point when you're wrong. And this is if you know how to mark it up, because if you think about fibs, they've been around forever. And all that a fib is a ratio of a number. And if you think about what a chart is, it is ratio of numbers. So it naturally repeats. Mm-hmm. I love it, you know. Then you can look at, say, a MACD. A MACD is pretty good for giving you a basic idea of direction.
Yeah.
All right. But you adjust it slightly. I adjusted into Fibonacci numbers to line up with the levels that I'm putting in.
Good point.
And then just basic things like an RSI can give you a rough idea of the state of play on the here and now. And then when you put them all together and you're looking at the peaks and troughs, and think about it this way. If you know how to mark a chart and you've got a solid level here and you've got a solid level here and the price is in the middle, well, you're already at 50%. Because it's going to hit one of them. Your next task is just to figure out what the general dominant direction is. And that's where your fibs and your MACD come in. You make a single choice on that and you stick with it. And you either accept that you're right or you're wrong. And the other part of it is, if you are going in a single direction, I do mean stick with it. Because too many times I say, right, I've caught this drop. Now I'm going to catch the retracement. Yeah, but if you're going against the dominant trend, you don't know how far that retracement's going to go. So what if it's only a short fake out? So you stay with a single direction for the day. And again, that cuts your losses out. Because if you're wrong, you just quit. I have a rule. If I lose, I stop for the day. It's that simple. You know, I'm wrong. I lost. I read the market wrong. That means I'm not in tune with it. Step away.
Yeah, it's good advice. It's really good advice.
That is. They're very disciplined too. Very disciplined.
Well, that's what trading is. Yeah. If anybody goes into this thinking that it's easy and that it's just X marks the spot, please, for the love of God, stop.
Yeah.
Because you're going to lose money. But if you look at it as a job and a career, because it is a professional career, you know, that's why it pays us quite well. You have certain things that you have to do, and it takes time to learn your craft. You know, you don't become a plumber or a doctor in a day.
I was going to say, what are your secrets to trading? We've just given us too much. And, you know, and we are going to invite people to reach out to you. But what I do want to talk about, and what really, really piqued my interest in yourself, Gary, was, first of all, I was on the 5% website, and they've said you're probably the most consistent trader they've met. So that's number one. And number two, I read somewhere that you won some, like, first of all, 80% of your trades. You went on a winning streak of something like 82 trades in a row. You didn't have a loser for 82 trades. That's wow. It's unbelievable. So
kind of normal for me.
So talk us through it. You know, come on, big yourself up. Let's hear about it.
Well, it's not right. I'll put this in context. I haven't had a losing year in 7 years, and I haven't had a losing month in 3 years. All right.
Incredible.
And it's all down to one thing. Less is more. I learned very quickly, the longer I'm in the markets, the more it's going to take it off me. I learned that really thick and fast, and I learned it through a hard lesson as well. And you could call it the greatest gift from your worst nightmare, because I lost a colossal amount of money. But up until that point, what that made me realize was I was gambling, and I just hit a lucky swing. So now what I do is I know the markets that I look at will give me 1-2 opportunities at best per day. So effectively, that's all I'm looking for, 2 trades. And I'm patient enough that I can come to my desk at 6 in the morning, look through the markets I want, zoom in on the best one. But then I mightn't get a trade till 2 o'clock in the afternoon because I'm waiting for these conditions to align. And then once I've completed that, I stop.
Some discipline.
Yeah. And it literally is. And I'm paid, bang, stop. And because I do it that way, each day is kind of positive expectancy, you know. And the other thing is I have a big checklist of what I'm looking for. And if it doesn't line up, I grade the trades, and they go A, B, C, D, F. And I only trade A and B. So
when I got introduced to trading, so long story short, obviously Mandela introduced me to the Forex markets, and I begged him to teach me how to trade. And I did. I bought him how many pints of Stella. I even tried getting drunk on tequila.
Budweiser, I'd let you come and sit with me.
But one day he finally cracked, and so he showed me this Forex market, and my God, he pulled out this list. Does this point align? Does this point align? And I was like, well, I thought this was easy. Thought it was easy money. No. So so I hear what you're saying, and
it is, and the other side of the checklist is it's not off one time frame either. I have certain things I look for, and I go down through the time frames, and basically all I'm doing, it's a funnel. Literally starting up here, and then you're funneling it in till it gets to the bottom. And basically the way I look at it is, if you cut out all of the bad, whatever's left has to be good.
You said when you have a losing trade, you stop for the day. And I wanted to ask you, is that as soon as you have that losing trade, or is it a certain amount of losing trades? Or how do you determine when to stop?
No, it's Now, the way I trade to some people is odd, but to me, it makes perfect sense because I never fully commit to the market on point of entry. I stage backwards into a trade to go forward, okay? Because very, very rarely you'll time the top of the market, okay? So I know where my initial entry point is, but I also know where the exit point is. In other words, the amount of pain I'm willing to put into the market, okay? Mm-hmm. If I ever hit that pain threshold, that is me done for the day because it has gone through my tears, and they are tears of sadness at this point because once I go past 50%, right, I'll kind of put this in context. I like to break an initial position by 5. Mm-hmm. Right. So if I was going in at 5, my account can take £5 a pip. I will enter the first position at £1. Now the second one will be another £1 and then another £1 to 3. Mm-hmm. Those £3 or that £3 is my trade. That's what's going to full target because very rarely you can time the exact pip. And if anybody says they can, you're a better trader than I am. Right. And I've yet to meet one. Not better than me, because there is better than me. But what I mean is somebody who times it to the pip every time. Okay? It's going to come against you. So why not get a better price? This is no different than my factory days. I would buy a little bit of product, but if I'm buying a lot more, I want a better price for it. Mm-hmm. And so forth and so forth. So that principle is here. So that gets me my bigger win. It also reduces exposure, because I work out the risk on the full amount. So if it's 100 pip there and I was at £1 a pip, well, that's £100. I don't want to pay £100. So I'll break it up and I'll enter at 20 pence and I'll build it up. Reduces the exposure. Mm-hmm. All right. But not only does it reduce the exposure, because it's got further to go to the target, it increases the upside as well. All right. But if I go to the 4th and the 5th tier, they are there to get me out of trouble. Mm-hmm. Because at some point the market will retrace and I might have dipped down too deep for me to get out of like a target. Yeah. But it can come back up and get me out at either a small loss, break even, or if I hit lucky and I'm trailing the stop behind it, a big win. So that's how I manage it. But if all of those tiers have been hit and the last one costs next to nothing, because it's right down next to where the stop would be, mm-hmm. and it goes into that means I'm wrong, and I'm just not in tune with what I was looking at. And if I'm not in tune with this one, I'm probably not in tune with the next one either. Mm-hmm. So my best bet is to step away.
Yeah, makes sense.
And then I'll look at it tomorrow with fresh eyes.
Yeah,
and that's how I do it.
Yeah. I like that.
Great. So I was going to ask you, so we've talking about many positives of Forex trading and, but let's talk about something. So what's the worst part of trading Forex?
The emotional roller coaster in the beginning is definitely the worst part, because you can be full of euphoria and you think you're doing amazing, but then suddenly you get a slap in the teeth because you've done well, and as you say, you're getting your yacht and your Lamborghinis or whatever, and you're getting the brochures out, and you're thinking this is and then it's snatched away from you.
Yes,
it almost takes you back to your childhood when you're getting wrong and your toys are taken away from you. You feel devastated, and it's one of those industries that can humble you down to that level.
Have you ever felt like that, Gary? Sorry to interject there. Have you ever felt like giving up when you've been slapped in the teeth? Have you ever thought, this ain't for me, I'm walking away?
Yes, to be honest. But it was different. In when I started, I used to trade for my business, but it was based on daily charts and one thing and another. And I had the light bulb moment of, well, if I'm doing this on a daily, and the way it worked for us is we might buy with the bank for a couple of months, just waiting for whatever. I was doing this personally, and I built up a fund quite well. and I lost it in 4 days. Literally, 18 grand in 4 days.
Wow.
And I was actually snakebite fearful of the keyboard. I couldn't touch it for about a month. It hit me at a time when the company wasn't doing as good as it should have been. And it was just a combination of elements. But then another part of me, when I settled down, thought, well, I must have been doing something right in the first place to have built that up, because I built it up from under 1,000. And I went back, but I did. That's kind of where the challenges and everything that I was talking about 30 days came from. I had to sort of step away from being the gambler to being the businessman. And I've been in business for a long time. I should have known better. And I just slowly built it up. And yeah, you get slapped in the teeth. My wife's, when the company closed, that was a real torrid time. I used this as a way out alongside going back into industry to work as normal. And I just put the hours in. But the other side of it, what makes you sort of want to she's having a go at me all the time. Oh, this is useless. This is not doing it. And you have these arguments, but you're trying to keep focused and you lose your focus. And then you think, oh, do I really need the hassle?
Right.
And you've got to get through that pain barrier. But once you're through it and you understand where you're going, then it becomes easier.
Yeah, that's
but
good.
the emotional side of it is horrendous. And the thing is, the higher you go, they think it's easy. It's not.
No, it's not.
You know, the bigger, I mean, I can trade up to 25, 30 pound a pip quite easily on my account. Okay. Right. But when you're dealing with those figures, yeah, you can make 200 quid in a heartbeat. And I do, because I look at return on investment rather than the sort of fabled RR. That winds me up, because that sets you up for a fall. You know, you've got to have common sense with it, because you need to be paid. Right? But if I can get into the market and get out quick, and I've paid for the day, I'm happy. And then I can do it again tomorrow. But those numbers can rack up very quick against you if you're wrong, especially if you're not disciplined.
Yeah.
You know, because how many times have you heard people go, oh, well, I'm not wrong, and they just let it run. Oh, it's 500 quid against me. Oh, no, I'll be all right. Oh, no, it's 1,000 against me. Oh, no, I'll come back. Oh, my God, it's 2.5 grand.
Yeah, guilty.
Whereas at 500, you knew you were wrong.
Yeah.
Yeah, definitely. So, you know, I've had every indication. But just an example for me. So this week it was gold. And I had clear indication which way gold was going to go. It didn't go that way. So, yeah.
Gold's been funny this week. It tanked twice when it shouldn't have done.
Yeah, so there we are. I was long on both occasions. So, but yeah, Mandela and I were speaking. And actually, you know, we're in contact, you know, regular throughout the day. So I messaged Mandela. Oh, gold, H2, H4, D1, all showing bullish. Let's go. Well, there we are. So, the better. But, so yeah, but I understand that, and I think one of the hardest things for me when I first started trading was admitting that you're wrong and getting out of a trade before it becomes too damaging. And I still find it hard now. Mind, you know, I put my hand up to it, and
we all do. Yeah. We all do. I mean, it's kind of why I stage, because when I started, it was always 100% to market. And then you put it in, and immediately it goes against you. I was like, oh, Jesus.
Yeah.
What's going on here? You know, I needed a way to relieve that, but I needed a way to reduce the exposure. And that's why I started split, because there is another version of that called Martindale system, for some of the viewers who don't know that. That is incredibly dangerous. But if you do pound averaging, like what I was talking about, or dollar averaging, depending on where you are, it's actually quite a sensible way to trade. And it's how your pension funds are built. Yeah. They are built that way. But there has to be a point of no return if you're wrong.
Yeah.
And that's where fibs come into it, because you can measure it out. And if you go, right, the extension's 127 to 161, well, there's your zone of pain. You know, so that's what I do. I'll stage down. And if it goes through that, I'm wrong. That's it. And if I'm getting a slap for 1,000 quid, you know, well, I'm getting a slap for £1,000, but it's a damn sight better than sort of going, this will come back, and then suddenly I'm seeing 3,000.
Yeah, no, great.
So I'd rather have a slap round the face than a kick in the nuts.
Any day.
You know, because the worst thing in the world is watching your kids fail. I've got 4, the wild, right? And they are, they're crackers. But I've got a work ethic in me, and I'm trying to push it into them. You know, I mean, my youngest 26 now, because I'm quite old. And he took a little bit of a, well, let's just say he's becoming a good trader, but it took a lot of time to get him in that mindset. But I can't really slap him about because he's bigger than me now, and I'm 6 foot and 20 stone, so that gives you an idea of him. Right? And also he's military, you know, so he's got access to automatic weapons. So if I say the wrong thing, it could end badly. But I'd like to do a bit more of that.
Yeah. No, it's brilliant that it's brilliant teaching your family to trade, and you know, Mandela. I'm quite convinced. You know,
it's not the easiest because he's the only one of. I've got 4 kids. All right. And I always make the joke of, have you ever seen the evolution of man where it goes from chimp to man? Well, my kids is that in reverse, right? And it goes from like old Chris down to the youngest one. And they all laugh about it because Logan's like that. You know, he's like, I can do this. But to get him interested in it was very difficult. Whereas like my eldest boy, you know, he saw the work ethic and he sees what you get from it. And he's doing really well, you know. So he's not really interested in trading. And the other 2 are the same. They're not interested in trading because they're doing quite well in their own lives. Whereas Logan wanted to follow it. And I've been through the journey with him because he's a young kid. Yeah. You know, and sometimes he believes the gloss. So it was interesting. And Joanne, my wife, she had a go at it, and she can't deal with the emotional side of it at all.
Well,
yeah. It takes a lot.
Talking of wives, Mandela, would you like to tell Gary about the
results of the I can talk a bit about Gary. So, Gary, we started it's like a simulated demo account. We gave it to 103 people this year, and my wife, love her to bits. She beat me. She came in the top 10. She's never read an investing book before in her life, and she just wiped the floor with me. She has not let me off the hook. So
that's why I'm laughing, because if Joanne beat me, I would never hear the end of it.
Yes.
It would be on every post-it note on my desk. She would have T-shirts made up, you name it.
There's an idea.
Yeah.
But, so, Gary, it's been brilliant to have you on the show. And do you know what? I'd love to get you back, and maybe
anytime.
One day we'll have a little chat about Fibonacci in a bit more detail, especially you and Mandela, and maybe you can convert me and educate me into using fibs. But Gary, I think, you know, a lot of our viewers are going to really will enjoy the show. So how can they reach out to you? You know, what can you let us know your contact details? And of course, we're going to post your details in the comments below.
I'm very easy found. The easiest way to find me is just go onto YouTube, look for the Scruffy Trader, which is me, because I'm not exactly polished, am I? You know, and all my contact details are there.
That's great. So, Gary, is there anything, you know, you'd like to add? Anything else you'd like to speak about, or not to put you on the spot?
No, I think we've been on a good little journey here. I've thoroughly enjoyed it. As some parting advice, I'm going to go back to that up there. That is one of my mottos. But the one motto that I live by, and it is something I preach to my kids, and I say it at the end of every single video I do. It's do what you love and the money will follow. And the reason behind that is very simple. If you put money before you do what you love, you will always fail, because you'll despise it. Whereas if you love something, and it doesn't matter what you are, you will get better at it. So if you want to be a bin man, a dustman, be the best dustman. And if you're the best dustman, you'll get a promotion. Become best bin man supervisor. And because you got the supervisor role, you get a pay rise. Then become the best supervisor. You'll become a manager and you'll get a pay rise. So as a parting gift, do what you love and the money will follow.
Oh, excellent. That's really good.
Yeah. I like that. I think for the three of us, in trading, investing is a passion. And when I talk to people who are interested in getting in, one of the first things I say is I have a passion for it. A question I get, I'm sure you get it as well, Gary, and maybe even you, Andrew. How much time do you spend trading? And it's hard to like make divisions in your day because it's almost like it's always in the background. You can.
I'd say
24/7. Yeah. So it's definitely if it's a passion of yours, go for it. And I think the way you worded it was perfect.
But to add to that, what I will say is the clicking of the mouse is the last part of the puzzle. Your homework and preparation is most of what you do. And a lot of people think it's the other way around. They get in, click, then they start working out to see what's going on. You should actually know your entry, exit before you've even pressed that button. And that is why I do 100 trades in a row without losing.
How are we doing, guys? All right. So I can say I think I enjoyed that more watching it back again than I did the first 2 or 3 times. I put in the comments about being Forex gold. So it's if you are a Forex trader, just watch that back. Talking about fib levels, and Gary has shared some more details with us, how he marks his charts up, and I'll talk to him if maybe one day when we get him back, if he'd like to share. But what an interview, and what a successful trader. And if you go onto the 5% website, so it's thefivers.com, you can actually see his interviews on there, and they actually share some of his stats. So so for me, is what a find, what a contact for us to pick up. So it's really good. So what about you guys? What do you think,
Andrew? I just want to say, great find, great to connect with him. A very humble guy, and it's so much information that he shares in there that I'm gonna go back and listen to it again. Because it's phenomenal.
Yeah, I really liked his perspective on a lot of things that he had mentioned. He's very military with his approach, and militant with his approach, and he also, I just took a little bit of notes. I liked what he said about the, his perspective on the Fibonacci numbers. It's a ratio of numbers. The charts are a ratio of numbers. And it must be a correlation. I never thought of it like that. You know what I mean? I knew that it worked, and I do use it during trades. But just thinking of it in a different angle, I think could really help you, seek certain ideas and could really improve trading.
Yeah, so same here. When Gary said it's a ratio of numbers, and obviously Fibonacci's a ratio for me as well. It just clicked as soon as he said it, and then straight after the interview, I was on the phone to Mandela, and we quickly run through some fib levels. And what I've done is obviously I've carried on my own style of trading, and I've just placed the fib levels over the top, like tracing paper, like a template, and just to see if it works. And it has, and actually by using fibs, it's given me some better entry levels as well. So it's been good.
I really do like fibs. Fibs is probably one of the things that I use the most. And for somebody like Gary, who's very successful, to be able to use them as well. And I guess it's almost like trading is less of a science, less of an exact science, and more of an art form. And when you have people that use the same sort of styles of art or style of trading, it's very it gives you confidence, I guess, to know that
like
you're
a validator.
on the right track. Yeah, exactly. I did want to mention the prize giveaway, which we have quite a few people that have entered into. So I think we could probably head over to that now. So #SFX, if you post that in the chat window, you should be able to get entered. I'll give everybody one more minute to get, their name into the draw. And the prize for today is going to be a spa treatment to Orchid Nail Spa. If the winner is outside of Bermuda, they're going to get a pair of really snazzy candlestick socks. We'll mail this to you if you're outside of Bermuda. If we get another winner who's outside of Bermuda, we'll give them a trade-in journal, a logbook as well.
Brilliant.
All right, so without further ado, that's the final call for all of the entries, and best of luck to everybody. Let's see. Thanks again for everybody joining live. Also, shout out to anybody who's watching the replay on this. The winner is Juliet Farmer. Congratulations, Juliet. Yep, well done. So we'll find out if Juliet is in Bermuda or outside of Bermuda. Either way, she's going to get something nice. And a thanks to our sponsors, Orchid Nail Spa, for providing the gifts for the show. Next up is the side bet, Andrew.
Yes,
really excited about the side bet.
So, I need somebody to take this off me. It's just taking up space. I've had it too long. Okay,
Collecting dust.
It is, to be honest. I'm drunk Mandela's blood from it. Game of Thrones style. So, guys, it's up for grabs, and also the crown. So I'm gonna get straight into it, and we're gonna look at Binance against US dollar. So I'm gonna share my screen.
You said Binance?
Binance coin, yeah, against US dollar.
Okay.
So
for anybody who's this is their first time doing the show, PJ and I have no idea before what Andrew's gonna pick. I see your screen. There we go. All right.
Probably too easy for you guys, this one. So, Mandela, I'm going to let you go first because me and PJ were talking.
I need the help.
We feel sorry for you.
I need the help.
Yeah, you've got a rough So, okay. Mandela, we're going to go. So it's 279, or we'd say 280. Can we just do an easy one? Higher or lower for the first side?
Higher or lower? Okay, can you zoom in a little bit? Just so that I can see. What's the current price?
I'm going to run to D1 for you.
Yeah, that's good. What's the actual current price? Let me see if I can pull it up. Is it 280?
Yeah, so we put it at 280. That'll be our benchmark.
Okay, so if the question is it going to be higher or lower at what date?
And for the next show, so 4 weeks time.
4 weeks time. Okay, so yeah, 4 weeks time, higher or lower? I'm gonna try and stall for a little bit. So that will be end of October. I think it's gonna be lower at the end of the month.
Are you sure now? Because you can actually, right, it's 50-50, that's gone. We couldn't phone a friend because Gary's in the live chat, so.
That's a good question. Gary, if you could post, what would you say? I'm not sure if Gary does much crypto. I'm going to go with lower. I'm
lower.
Committed. Yeah.
So P, sorry mate, you're higher.
It's all right. That's all right. I see a bit of a resistance. Let's see if let's see if things work out. That's fine. It does look like it's in a bit of a channel there, right? Down to and what's our time frame?
So that's on a D1, but if you want me to zoom in and zoom out, let me know.
Yeah. Let me see. Yeah, that should be fine. I mean, we're not calling the exact numbers, right? It's just higher, lower.
Yeah, just an easy one to start off, guys, and then we'll.
Give them.
But you say easy, but I seem to have a hard time with the easy ones and the medium ones and the hard ones. So I welcome the easy ones. Okay, that sounds good. Shout out to the swag providers, just for kicks. They provide us with our swag. So J4K, really great to have them on board as well. Next up, we had Chat and Charts. I don't know if you guys want to have a look at one or two more charts.
Yeah, should we?
That was.
Yeah, let's do it, and let's let's put up something different, guys. Well, that's it, isn't it? Say, let's step away from crypto for once.
Okay.
Sure.
We can step away from crypto. What do you guys want to look at?
It got me interested in
SPY,
to be honest.
You want to look at SPY? Okay, let's look at that. So I think, in terms of my opinion, I think in between these two levels is key. We're heading, I think we're a little closer to 3,500. But the trend is your friend. These two candles look very, very ominous, very, very worrying, I should say. So I would say probably we're gonna head a little lower in SPY before we head up. I don't know. What do you guys see here? I think this may be a tough support, but once we break through here, I think we're gonna test 3,500.
Yeah, I'm I'm looking at a few looking at it from a weekly perspective on SPX, and I think we definitely might see a bit more downside. I'm not sure what economic events are in the calendar to be announced, but I'm sure that will have
CPI is coming out, inflation next week.
Okay, so yeah, definitely I feel it might be trending down, but we could see a change once those figures come out.
Yeah, I think that's basically what I've been looking at. I'm trying to focus a little bit more on early trading when the setups are right, and trying to limit it to the days when there is a big impact news event.
Has your risk management style changed with that as well? Like, would you say I don't know what percentage you consistently stick with, like a 1%, portfolio, or are you doing, with those high impact days, are you going to be a little bit more risky and trade like maybe 5%?
So yeah, I think one of the things that I've found is when you're right and you feel like the stars have aligned, then it's better to go a little bigger and kind of go pedal to the metal,
right?
Because that can really make up for those losing days or those break-even days. So right. I try not to do more than 4% of capital on one trade. But sometimes I do go a little bit more than 4%. If it's something that I feel like it's really pushing, it's really pumping. Yeah,
makes sense.
Yeah, and then stop loss wise, I try and keep the stops to 1% if I can, and that's 1% of the total your total portfolio. And I'm pretty disciplined with that. I think Gary talked a bit about that as well, where he said once it hits a stop, he stops trading for the day. He's done. Right. Yeah. So kind of being disciplined. I don't stop for the day. Maybe I should. That might reduce my losses. I would have very few losses if that was the case.
Yeah, because I mean that is very disciplined, but sometimes if you got the time and you see it, like you might get stopped out, but you were still correct in the long run. You know what I mean? It might. So it's I like that militant approach, but I guess there's always room for tweaking. You know what I mean, to your benefit.
So you got to do what suits you as well. So with trading, for me, it's never been like a copy and paste. Like Mandela, us three, we trade successful, but we got different styles, haven't we? I don't trade flips. I trade levels. Yeah, and I trade trend. That's what I do. So it's horses and courses. It's what suits you. But I will say, I have taken so much out of Gary's interview, and I have applied some of his techniques. So on my 5% account, that is very disciplined, because that potentially has to pay me very well. But on the account I showed at the beginning of the show, it's not big capital. So with that, I can push the boat out, and if I'm having a really good day, I can keep squeezing. But it's like I say, there's no one size fits all when it comes to trading. It's what works for you. I see so many people squabbling on Twitter and Instagram, my strategy is better than your strategy. It's not about strategy, is it?
No.
It's about dollars in the bank. That's so for me, people's opinions don't verify my strategy. It's having certificates from 5% to having certificates from FTMO and getting up payouts. So that's what it is for me.
Yeah, and I agree. Like, sorry, go ahead, Pete. Go ahead.
No, I was gonna say I was echoing what you had mentioned earlier as an art, right? And some people have simple strategies, like they might just use 3 indicators. Some people just trade just off of candlesticks alone. So it's one of those things that it's just beautiful to see. Like you could get the same result, but many different ways. You just have to find something that suits you.
Yeah, that's the truth too, because nobody can tell you the way to live your life, and I think it applies with all aspects of your life as well. And if somebody's telling you what to do, sometimes that's even that's going to mess you up even more.
What I would say is, if you're trading, and it is good to get a mentor as well. So, for example, if my style suited you, Mandela, I'd use a mentor. If Gary's style suited you, use Gary as a mentor. P or Mandela. That's what you need to do. You need to find out what sort of trader you are, and then once, if you like your fibs, talk to Mandela and Gary. If you like me, you like to trade, I like to trade levels, and talk to Andrew. And
absolutely.
What you want to do.
And like you had mentioned, to find mentors, like what we've done in the group has really done that. Maybe not as formal as approaching a mentor, but this group of common minds, people who's trying to have a common goal as well, come together and really share information. I think it's expedited a lot of people's time in learning to become a successful trader.
Yeah, definitely. So with the groups, what people share. So I always rely on Mandela to share the high impact news, because I don't only trade the news either. But sometimes it is good to know, especially if I got some of my trades are exposed or something. So it's groups are fantastic. So if anyone is watching, thank you very much. We really appreciate it.
Yeah, salute to the group, everybody that's in the group. Everybody sharing their own perspective. I did want to just show one more chart, because we were talking about Fibonacci, and that chart is oil. Oil's broken out of this channel that it's been in for a while, and it's just, I don't want to jinx it, but it's just something that's on the watch list, and let's put it that way. These are the Fibonacci's from a weekly perspective. So we could be heading back up towards 100 and above, I think. But,
so where would you be looking to buy into? So for me, probably above the 50 and 38, or would you play it safe and buy above the 38?
You mean right now?
Yeah. So for me, I'd sit that out right now. Just above the 50, you'd see like two candlesticks. I'd be looking at that as the next.
So here, you're talking about here.
That'd be a concern, a bit of resistance for there. We could be going to there, and I'd be want a clear break above that then twice.
Yeah,
maybe it will pull back to that 0.618 fib line, and maybe that could be an entry if it retests, or it might even retest on the top of that channel.
Yeah, that's what I was actually thinking. It's just kind of far to go, but I was thinking maybe we go down first a little bit.
Yeah.
It's hard to say. I know there's a lot of news out of OPEC. So the fundamental story is very bullish, where they're going to be cutting production. There's also the SPR, which is the strategic oil reserves in the US, which are at record lows. So it's a lot of bullish news, but you got to use the charts as well. It's hard to make a call. Okay, cool. I think last thing I think you guys were going to look at was the wise words of wisdom. Everybody always looks forward to that part. I can go first if you guys if you want me to take it.
Come on.
Okay, so wise words for me for today. I actually didn't prepare anything, but one thing that Gary did mention was the hard part is you. Like markets are easy, and I think it's tough to say easy if you've just started. But I think the principles, the concept of you want to be buying low and selling high, that's easy. Like my 5-year-old son could pick that up. But the harder part, the 90% or the 80%, is how do you apply it? And so just being able to look at yourself and find a way that really works for you, finding a group of people, which we talked about, and finding a mentor or group of mentors. I think that really helps to deal with the me or the you, and being able to have the full package. That's my wise word.
Yeah, I liked a few things that he had said as well, and I guess I could steal a bit or echo some of the things that he had said. And one of them that really stood out to me was his positive approach to negative sort of events. And he had mentioned, using so I guess bad experiences, the greatest gift from your worst nightmare, and that is real. If you can't have the mental stability and stamina to continue going once you face sort of losing trades, you're not gonna make it at all. And this market is ruthless. So yes, stay positive and just keep chugging along.
Yeah. Thanks, B. Thank you. I like that.
So for me, guys, as every show, it's the Jedi mind. Yeah. So today's wise words, they come from Asajj Ventress. You always have a choice to be better. You always have a choice to pick the right path.
Yeah.
Very nice. Very nice. I like that.
Well, guys,
Short and sweet and to the point.
It's a great book.
That's nice. If you're looking for a Christmas gift to get, I mean,
Yeah.
hey,
I'll get one of the post book.
yeah. All right, guys. So a few little things, housekeeping things, just to remind everybody. If you are listening to the audio version of this and you want to see our lovely faces and charts and pictures, check us out on YouTube and vice versa. If you want to check us out on podcasts, it's on your favorite podcast app. Thanks to our sponsors, Orchid Nail Spa.
Thank you.
And I think that's more or less it, everybody. Unless you guys had anything. What are you guys doing for the rest of the month between now and the next show?
So I'm traveling again. So like I said, again, yeah. Just got back from South Africa, and I'm off on my travels again week today. So probably gonna look at gold next week, and then I'm just gonna turn everything off for a week and just get my head down. So yeah.
That would be nice. Yeah, I feel like you just got back like a week ago.
Yeah, I did. Yeah. So yeah, it's all right.
Yeah, I think so. For gold, you mentioned gold. It's at the point now. It's not on the watch list anymore. It's in the trash can.
Yeah.
I'm just gonna leave it there for a little while. I'm not gonna empty out the trash, but it's just not looking good. It's following, for some reason, it's following stocks. It's following like crypto. So I'm waiting for it to decouple and do its own thing and be independent. But we'll see.
So I'm looking forward to reviewing gold end of the year with you two.
Oh my god.
Yeah.
That's we have that on the chart. I'll pull that chart up.
It's not over yet.
Yeah, it's not over yet. Come on, fingers crossed, Pete. All right, so I think we had let me pull it up because it's embarrassing. So I think there we go. So this is where we called gold to be PJ and I kind of grouped PJ with me. I don't know if PJ actually.
Well, it did look like it was headed for a breakout, but I guess it just showed some resistance. That last, I'm sure it was probably like a 0.618 if you put the fibs to it. But it seems like this time we got it wrong, and that's what happened.
Yeah, I mean Andrew's closer than us, a lot closer. So I want to tip my hat off to Andrew. But
then again, it could be in that. Yeah, it could be just in that channel. You know what I mean?
Yeah.
So just trying to find some sort of like silver lining,
Yeah. Sometimes you call them, sometimes you don't.
Exactly.
This is one of those that it's like, thank goodness we had a stop loss.
Absolutely.
Because it's been pretty brutal. What about you, PJ? What are you up to for the rest of the next couple
week?
weeks?
I'm been just pretty much watching a lot of the crypto. Seems like we're at a pivot point. We might I think some of the monthly charts are looking kind of bullish for some. So just seeing if it trickles down, or maintains it, I should say.
Yeah, so XRP is looking pretty good.
It bounced over 50%.
Yeah, it's been good. So got back in at 33. He was stuck at 33 for weeks, and then it's doing well. And Bitcoin, I'm still unsure on Bitcoin. I think it's a liquidity fill. We're getting fresh money into the market, and then we'll see another dump. Bitcoin's definitely trading, in a channel, or it's consolidating. And I just wanted to do something, make a proper move, so we can get into it. But XRP, it's looking pretty good. We'll see where we are now in a couple of weeks.
Yeah, I think the sentiment around the community is getting a bit very bullish. With these latest court occurrences, I think people are feeling like it should be some sort of ruling in XRP or Ripple's favor coming up shortly.
I think once that happens, it's going to be like lifting up a door.
Releasing a bomb. It's going to be a hot potato action. Everybody want to try to grab it.
From the XRP circulation, isn't it? Unless they're going to burn coins or try and get rid of some of them, or limited cap it. I don't know what they're going to do, but that's the only issue. I think with XRP, it's going to be the technology. There's a good alternative to Swift, and I think once we get the digital dollar, once we go cashless society, is the XRP platform what they're going to use. It's going to be interesting times. It really is.
It is. I did want to mention one last thing, guys. Remember the FX competition. So we do have in the FX group, which Andrew runs, it's euro dollar at the end of October, and we got a few entries. So thank you to everybody that posted, and we'll see at the end of the month what happens with euro dollar. I think it's been a little choppy lately. We can pull it up as well. It broke through $1, which was making headlines everywhere. And there we go. So it looks a little bit like gold, actually, if I'm honest. So we went back down this month. We're down on the month, just sitting just above 97. So we'll see, but thank you for everybody who's participating in the competition.
Again, there's been some really good information in the group being shared. So I'm enjoying it. It's been excellent.
Yeah. All right, guys.
I'll catch you soon.
Everybody. All right, guys.
And thanks again, Gary. And thanks to sponsors.
Phenomenal. Thank you. Yeah. All right, P. I gotta find the extra. Okay, here we go. Check you later, P.
Take it easy, man.
Yeah, man. It's good.
Mr. Coming in hot.